Warner Brothers reported lower sales earnings in their fourth quarter as the company weighs a new takeover offer from Paramount Skydance, $31 a share, which could outbid the company's current deal with Netflix. For more on this, I'm joined by Robert Fishman, senior analyst at MoffettNathanson. And Robert, thanks as always for joining us on the latest episode of the love story. Not so much of a love story, I guess. I don't know what it is right now between these three. $31 a share. We're going to talk about that in a second. Let's talk about Warner Brothers, their earnings, first of all. What kind of a factor is that in the midst of all this?
Well, I think it was a proof point, right? Talking about how successful they have been in terms of monetizing the content. You know, we've seen that through the success that they've had at the studio and that they continue to build momentum on the streaming side, reaching the subscriber goals that they've laid out and continuing to grow internationally as they roll out in some of these key European markets that will help them continue to expand their growth in 26.
Now, and this was Warner Brothers. We were talking, just to clarify. But their numbers, their revenue was down. Though, is that any concerns there, or is that just part and parcel for the business right now?
Yeah, I mean, clearly there are challenges that are well understood, I think, on the network side, given the backdrop and the challenges really facing the industry there in terms of cord cutting and advertising on the linear network. So that remains a continued overhang, and part of the reason why they decided to split the company initially was to try to get that value out of the streaming and the studios and not allow for the networks to be that overhang on the value, thinking about the stock price before all this began.
All right, and let's talk about this, the latest offer from Paramount, $31 a share. You don't think it's going to do it?
Well, I think what we've heard so far is the $31 that the board continues to evaluate is likely to lead to a superior proposal as defined by the merger agreement, which will then allow the companies, Paramount, Skydance, and Warner Brothers, to again, continue that negotiation. So that's what we're waiting for, to see how this plays out from this increased bid on the $31 that you mentioned.
And where do you see this going, assuming it does move forward? What's a reason, or not a reason, but what's a price you think it'll end up at?
So we expect Paramount to go to at least $32 on this round. And then it's up to Netflix to see if they want to match that they have 4 days to come back and reevaluate. The math that we've done has suggested that, and there's lots of different ways that you can come to this from the outside. Obviously we don't have the perfect amount of data from the inside. So from Netflix's standpoint, they can make the math work what they want to, but they continue to talk about how disciplined they're going to be. And so we think that up to $30 on the Netflix side, which again, sorry for the complexity, but it's not apples to apples to the Paramount bid, because Paramount's bidding for the entire company. Netflix is just bidding for that streaming and studio asset.
And you think it could end up at $34 a share even? And would it be worth it at that point?
Well, for Paramount, I mean, what we continue to believe is this is really a must-have for them. So to the extent that they need this content and need the streaming service in order to help what they would say accelerate their own growth, but what we would argue is to really help truly deliver the growth that they're expecting as part of their standalone company, to try to pivot to a real scaled player streaming-wise globally. That's why we feel that this is more of a must-have for them. So when you say, would it be worth it, I think it comes down to how you want to define success with it or without it. And without it, we think it would be a much more challenging road.
And how much of a wild card is Larry Ellison in this? I mean, is this the feather in the cap, and he really wants this, and that's why he's been so involved and pushing it so much?
I mean, he clearly plays a very central, critical role within all of this. What we've seen along the many different increased bids on the Paramount Sky side was essentially first the unwillingness or not wanting to really give his personal guarantee, but that was something that the board very much, the Warner Brothers Discovery Board, pushed for, and eventually he did accept that term. So there's a lot of central places in terms of how Larry Ellison plays within this context, and eventually will be one of the biggest deciding factors in terms of what that price is going to be.
And then, of course, from the other side, Netflix, can you see them coming back?
Yeah, so again, our math suggests that they can definitely increase their bid, but they remain very committed around this being disciplined and that this is not must-have for them. So if you believe that and take them at their word, I do think that they have a growing willingness to walk away from this deal if it becomes unattractive and the math becomes a whole lot harder to make accretive and to have strong returns on that significant investment. And they can put that money better use in lots of other places.
Well, and just quickly before we go, what other spots might they look for? Might they look if this one doesn't fit for them?
So I think the whole idea of premium content is clearly an area of focus for the company. We would throw sports rights at the top of that list, including the NFL. And so we think that there will be opportunities in the next couple of years, or even as early as the end of this year, for the NFL to redo their contract and look to get early renewals out of their most important contract really in the whole U.S.
Okay, we have to wrap it up there, but Robert, thanks very much for joining us. Appreciate it.